The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Got the German DAX, folks. As you can see, we've been up here at this top level for a few days. Made a little bit higher high last night, then sold off a tad. And then if you take a look at the FTSE, you'll see that the rumor, I guess, about Boris Little Trump Johnson taking over the Irish vote is maybe up to a little suspect. And so the pound is selling off about 100 pips and is selling the FTSE down. Whether that means anything or not, I don't know. But I wanted to share something with you that John Jameson brought to my attention. Folks, take a look at this picture that you can see here, what's going on here. I want to show you the global, this is a thing from going back about 40 years. Just get this going and just put this up so you'll be able to see it here. Hold on one second. Having a little tough trouble. There we go. This basically shows the countries that with their average incomes and stuff like that. And what it's related to is what John was trying to show me is the increase in internet access. Let's just show you what it looks like now. I mean, this is just truly amazing to see this. You can see the world has become a swamp for data, and as you can see here, it's really been quite amazing what's happened over these last few years. So a lot of this is we're seeing tweets and all the other things and hacking and all the other bad things. So there's a lot of bad things with the internet, and there's a lot of good things with the internet. So we're going to see what happens. But you see, we live in a global market now where the slightest little bit of news is on the air. If you remember, back many years ago, I mean, well, I don't want to go into the history part of it, but, we have instantaneous news now, and a lot of it is not reported the way that it should be, not just on any, a lot of people are responsible for it, and I don't know if that's good or not. I don't know, but we'll see. I'm just surprised that the stock of Twitter isn't a lot higher, given the fact that we see it all the time, whereas with Facebook, that stock went up, 40 times or something, 30 times or something, and yet, Twitter's done very, very little. So I'm surprised at that. All right. Oh, by the way, we have some good news today. We have Bill Meridian as our guest at 9:30 for Cycles Research, Vienna, Austria. As you know, Bill alerted to us to the big move coming in gold, which certainly happened, and he's been spot on stocks, and it would be really great to hear what he has to say, because he's a really nice fellow, plus he's a really smart fellow. We want to keep an eye on that. Let's take a quick look here. I wanted to show you, someone sent this to me to remind me what happened, just to show you the relationship to what happened to the NASDAQ in 2000 versus the 1929 crash. That was equivalent to the 1929 crash, folks. That NASDAQ drop, it dropped almost 90%. And, that was the dot-com bubble, if you remember. That was a once-in-a-generation type move that this old cowboy will never see. You young folks out there will, but I won't see that again. But we'll have to wait and see. Now, we've had, a big sell-off in bonds. We hit some really strong support Friday in the bonds. Went down to the 1.618 area, and has rallied about a point and 3/4 this morning, and we're going to be able to see. Now, we have a short show today because of Bill Meridian. I wanted to bring to your attention, folks, Mr. Z is talking about the natural gas. We've had a 12-cent move in natural gas over the last couple of days. We're looking at the February contract, and that goes into delivery on January the 15th. So we have several. This is a very strong seasonal, folks. If you look at the natural gas chart, you'll be able to see that we're down in an area which is really strong support. I will post the chart as it was of just a day or two ago, but we've had a pretty nice run here. Let's get this up here so we can see it. But this little puppy's ready to go. Let's get this up here so we can all take a look at it. But it's got a really good chance here. This happens to be the December contract. I'm looking at the February, which is selling for a lot more. But it is a strong seasonal. You could trade either December or February. I think would be too much trouble. You don't want to go into November. That comes into delivery too soon. In fact, I think it's into delivery tomorrow. Okay, let's move on and talk about the gold market. We had a really significant bottom in the gold last Friday. Get this up here so we can see it. In fact, we were on the air when this thing was happening, and we had a pretty good rally. We went right down to the 786 at 1478, and we rallied $23 up to 1501. We're trading around 1494 right now. 1501 happened to be the 78% retracement of the high that we made on Friday. So unless we get above 1501, we have a sort of a negative bias on gold, for the rest of the day. Regarding the stock market, we've had a little bit of a sell-off overnight, due from a lot of different things. Whatever the news is, they bring it out, and sometimes it's good, sometimes it's bad. They finally have agreed that yes, there's something going on in the tariff world with that China deal, but nobody knows for sure. But again, that's another one that reacts to tweets almost instantaneously when they actually occur. There is one chart that I think is, well, I think it's important, so I'm going to bring it up here and show it to you. This is the, hold on one second here, boys and girls. I think this is the most important chart of the week, but we'll see. All right, this is the cash S&P index. And you'll notice it only trades on the open. It doesn't trade overnight. And you'll notice here that if you can see here closely from October 3rd to October the 11th, that we had a beautiful ABCD pattern that was right at the exact 786 of the high we made back on the 13th. You'll see the two red boxes that are there. You'll notice what happened. There was a big gap down. And today, everybody that bought on Friday, because of the big sell-off we had in the last 45 minutes, is basically setting with a loss. The interesting part about this is the S&P futures had a huge increase in open interest on Friday. I mean, a big 55,000. That's a lot. And all those people that bought that, unless they bought it early in the morning of the 11th, are setting with a loss. Anyway, if we gap down today, that would tell us that this is doing the same pattern that we had, on the other little red box that you see over there. We think these repeat quite a bit, but you have a perfect ABCD at the 78% level. You also, if you want to check these numbers out yourself, is to look at the Dow Jones Industrial Average, a perfect ABCD at the 78% level. Look at the NASDAQ, a perfect ABCD at the 61% level. All of these charts are in the newsletter, so if you're a subscriber, you'll be able to see those and see them line up. I focused on the relationships between 2000, 2004, 2007, not 2000, 2000, 2007, and today showing that 5-point reverse wave, 3 drive to a top pattern, that there's a potential that we're seeing here. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, we're back, folks. I posted a chart of the Treasury notes going back over the last 2 months. And if you can see on the far left there, back in September, we were making an ABCD pattern up there at the 132 level. From that level, we broke substantially from 132 all the way down to 128. That's equivalent to 7 points in bonds. It's only 4 points in the notes. And then, of course, you had another ABCD pattern that extended into October the 7th, which was also anniversary date of the high of the stock market in 2007. And from that level, you came down and you had a 61% retracement on Friday. We're having a little bit of a bounce today. The bonds have rallied about 1.75 points from that low, but they should have at least a 3 or 4 day rally here. I don't think it'll be 4 days because it looks very, very bearish, but you figure 3-day rally today, tomorrow, Wednesday, and then maybe another leg down. We'll see what the rally is going to give us if, in fact, it does come. But this market, the reason why I'm bringing this chart up, folks, it's just a, hourly chart over the last 2 months, and this is what I look at. Folks, I get emails every day telling me why negative interest rates are a good thing or why they've happened in the past or why they're going to happen. And these guys are, I'm sure they're very smart, much smarter than I do. But, I'm just an old country boy. When I hear stuff like that, it doesn't make any sense to me. I go back to that book that I read many years ago by Bernard Baruch, My Own Story. It was his autobiography, and in there he talks about don't be concerned on the return of your money, on your money, be concerned on the return of your money. In other words, you always want to get your capital back. And with this negative interest rate, they're not giving you any guarantees, and you have to pay them to do it. That don't make any sense. Anyway, we'll watch what happens over the course of these next few days here. We'll see if it's going to be done. A lot of things going on about Brexit. I'm following it closely with John Jameson, of course. And, Mr. Johnson does not have a majority over there in Parliament. I think he has a one-seat lead in prime ministers or something like that. So he's still under the gun, but they are getting closer. They've only got about another 2 weeks to get the whole thing done, I believe. believe, and then we're going to see, what happens over there. So, but the pound had a pretty good move. But believe me, if that thing falls out of bed, or something happens with these negotiations, it could be right back down at that 120 level, without too much trouble. We talked about it on the air the other day at 128 on Friday, that it was making that big 1.27 expansion ABCD pattern, and that's what happened. That was the perfect pattern we were also looking at in the euro. We were watching this as it was occurring, of course, on Friday. Get up here so we can take a quick look at the euro. You'll be able to see that we got up to that 110.66 was the high. We got down to, I think, 110.10 or something last night. We're trading around 110.30 last on the euro. So it's held up relatively well in here. But the key to that euro is the U.S. dollar index, because that's the one. The euro is 53% of that. And if you look at the euro versus the U.S. dollar, we'll get this U.S. dollar up here, and you'll be able to see, we made that ABCD pattern. We had the double top. You can see that at point D. There was a double top. And what we've done now over the last, 2.5 months is we've had these ABCD corrections. This is the third one at this 97.84 level, and as long as it stays above that 97.40, it's got a chance to go back up and make a third top and possibly even break out on the upside. So, this market, they're having some really good moves, and they're repeatable, folks. Look at the euro. I mean, we talked about that euro a week in advance of what it was going to do, and it did. Now, they don't always do that, but that one worked absolutely perfectly. So sometimes they work, sometimes they don't, and you're looking for the ones that don't work. Hopefully this week, I'm going to have a very special guest. I mean, all my guests are special, but this one is going to be what we call super special. Tom Hugard, my good friend who did the seminar over in London. He lives in the UK. He's from Denmark. I met him 16 years ago at a Bryce Gilmore seminar in Las Vegas. He has become one of the super traders, folks. He does really well. He does a lot of day trading, and he does it in a way that is just unbelievable. David Paul, who's a psychologist from Johannesburg, South Africa, was also on the program, and I'm going to have David on the program too, because he's going to explain what Tom does. Tom only is right about 30% of the time, but the amount of money that he makes is just beyond belief, because what he does, he presses his winners. Really presses. In other words, if it starts to work, he just keeps adding contracts, using stops, of course. But it's not uncommon. It's not uncommon to have him do 6 figures a day. Last week he had a 7-figure week, and this is really amazing what he does. We're going to try to have him on to let you folks listen to what he really does, and I think you'll enjoy it. I was mesmerized for 2 days, actually, when I was in London. Had a wonderful seminar, and we're going to have that. Tom's having it all recorded. It's going to be made available, the whole 16 hours. So we'll see when that comes out. I'll let you folks know, what happened. Okay, let's go on. Any questions you have, folks? It's 877-927-6648. 6 minutes, we'll have Bill Meridian from Cycles Research to talk to us. Someone's asked me the question, has gold made a major bottom? I don't know if it's a major bottom or not, but I do believe it's a very, very important bottom, folks. Let's get it up here so we can take a look at it here. We'll just get it here because it was right on the money. Now, this is a, whoa. Just get it here. Don't want to get this in. Okay, there's your gold. You can see here we made a beautiful ABCD down at the 78% level, 1480. And we rallied all the way up to 1502, now 1501. 1501 was nothing more than 3 lower tops in there. You can see them at 1520, 1514, and now 1501. If we get above that 1505, then we've got a shot to see this one go to 1540. But any move below 1475 now, folks, is not good. That sets up a move substantially lower, probably around 1410, if we do that. And I'm not sorry, though. Tucker's asking about the upside target on natural gas. Tucker, I'm not even sure it's going to go up from here. All I know is it's got a chance. The way I'm doing the natural gas, Tucker, is I'm not worried about where it's going to go. I'm worried about how much I have to risk to see what's going to happen. At 10:30 this morning, in 1 hour, I'd like to see the natural gas be making a low, intraday low here, be down to 3, 4, 5 cents, or hopefully it had a nice 12-cent rally. So a little pullback there around 10:30, I'll look at it. So I'm not in it, but I'm certainly interested in buying it today. So we'll see if that's the case. We did have a beautiful full moon out here in the desert yesterday, folks. Just absolutely spectacular. And we're going to have Bill Meridian on very, very close to the 4 minutes from now, and he'll be able to share with us some of the things that made him so very, very famous. And I want to thank Marshall and Lynn for visiting us while they were down here, and we look forward to seeing you here on your 40th anniversary, buddy. We're going to do something really special for you. All right, folks, stay tuned for Bill Meridian of Cycles Research, Vienna, Austria. Bill's going to be talking to us about gold, stocks, and Treasury bonds, so stay tuned.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Bill Meridian, Cycles Research, Vienna, Austria. Bill, are you there?
Yes, except I'm in my home outside of Princeton, New Jersey.
See, you never know where you are. You devil-may care type traveling guy. Hey, listen, you've been so spot on in these markets. Do you mind sharing us what you're looking at here for the month of October?
Oh, yeah, sure. Are you on slide 2 at the moment?
Yes, I'm on slide 2 at the moment. Yes.
Yeah, well, the summary is stocks are likely to rally. Bonds are, well, let me say that in the next few days, I expect it to be like last week. The first few days are going to be down, then you're going to have a strong close to the week, except the magnitude will not be as great as last week. So I see we're down here in the pre-market and just opened. And I expect it to be moderately down the next couple of days and reverse and close the last half of the week, close on the upside, but not with the magnitude that we had last week. Bonds are likely to rise over the very short term. Gold is likely to rise over the next couple of days, but I think gold may be a bit lower, but we'll go into some detail here. The next slide is October. We know that October is the most volatile month of the year, has seen some of the largest one-day price declines, has usually finished on the upside, and the likelihood of a higher October is enhanced if the month opens up on the downside. If there's been a daily drop of 1% or more in the first days of the month, the odds of a higher month reach about 70%. So that's where we are. So I would buy any weakness here. And if we, my number one, the stock pick here, which I own a lot of, is Apple, because Apple, actually October is the strongest month for Apple. And the weekly cycle points up. So you've got both cycles pointing up, and you've got the month up. So that's my number one holding. And down one more slide, of course, this is the monthly S&P cycle. This is the most basic tool. That's just using spectral analysis to extract out cycles. We test them for profitability and project them out again. So this is, I'm not showing the weekly or the daily. This is just the monthly. And this goes up into the end of the year and then down in January. So this is one of the reasons. And of course, next year is 2020. It's a year ending in a zero. So now you've got it's a year ending in a zero, which is the most bearish returns of any year based upon the last digit of the year, and this cycle turning down, which is why I'm bullish up through the end of the year, but then bearish in Q1. So if we go to the next slide, and when I was brought up on Wall Street, they always told me the real market is the advanced decline line, and there it is. It's you're short of hitting a new high, and there's a lot of talk about the advanced decline line without all the funds that are in the on the exchange. The industrial stocks only advanced decline line, and somebody tested them out and found out that the regular advanced decline line works better than that one. So simple stuff keeps working. But the way to look at it over the short term is the next slide. That is the 10-day moving average. Now you'll note there's two higher lows, and if you go back to September, you can say December there are 3 higher lows. I've got the last 3 marked here. This is one of the key short-term indicators that I use, and so frankly, it's the horoscopes for the next couple of days set for the opening don't look bearish, but how much can the market fall if this is the technical condition of the market? The AD line is oversold, so you have to combine the two, and so the NASDAQ looks about the same. So I am cautious in the next few days, but would use that weakness to add on. And if we want to now shift over to bonds, one of the first things, the most basic cycle is the cycle for the year. Here we're seeing the expected return. In other words, the percentage that the percentage, let's say the market, the bond market was up 60% of the time for 1%, so the expected return would be 0.6%, which is what you see on the left axis. So October is not such a bad month for bonds, so they have this supporting them. So let's go down one more slide. And weekly bond cycle. That is the weekly cycle, which points right now is at a low, so we should get bonds popping up the next few days and topping around the 18th. And then it gets a little tricky. It drops from the 18th to the end of the month. But as we've seen, this is a strong month, and the monthly bond cycle is still rising. So the bulk of the cycle still point up. So I would not be short bonds here, except for very short trades. I have it marked here. This is also a PTP, which is a projected turning point. which means I simply took day counts, which I learned a long time ago from George Lindsay. It's been attributed to W.D. Gann, the best book in the subject, Dynamic Trading, by my old friend Bob Miner. No, that's the best explanation, is you simply take day counts and Fibonacci ratios from past highs and lows and project them out. And what I find when the cycle matches the projected turning point, that's high reliability pivot point or turning point. So let's look at the next, let's look at the advanced, this is the bond advanced decline line, and look where that is on a 10-day moving average, very oversold.
Okay.
So you're set up for, I think, for a good bond rally, which that is supported by the notion of higher stocks over the next few days. So I think you have at least a good 3 to 5 day rally here in bonds. And so let's go down one more to gold. And first of all, anybody would tell you that is a bearish, bullish formation. That is some sort of a triangle, a rising triangle or just a triangle and a breakout. And it projects up to around 1650. And so let's go down one more and look at the gold seasonality. Now you see we had the months of the run from June through September is the strongest period, one of the strongest periods of the year. September is the single strongest month of the year. October is sort of flat. And usually gold is weak in the second half of the month, and we just entered the second half of the month. And then November and December, as you can see, are up. But December is peculiar. There have been more major gold highs in the month of December than any other month of the year. And then you see January, February. Then we hit the weak seasonal part of the year, February through June. So let's go down one more. Now here I put the weekly and the monthly gold cycles both on the same page. So during a period of the month when it turns weak, that's the static cycle. The dynamic cycles are both turning up. So how far can it fall? So I'm, the best I can say here is there'll be a mild rally in gold in the second half of October. And then November, well, we'll do November in the future, but November shouldn't be too bad either. So I would not short gold here. Let's put it that way.
Wow, that's a really incredible cycles, Bill. I tell you, I can see why you're always in that the timer digest stuff. This is really, really. Does anybody even come close to doing the type of cycle work that you do, Bill? I'm sure there are people out there, but
I don't know if they are. They're keeping it secret. But this is the same idea I got way back in school in the early 70s, and I designed this in the late 70s. As people came out with Foundation for the Study of Cycles came out with cycle projections. I said, that's great. I said, there's only one problem. I said, if you're trying to make money trading these cycles, you're not going to do it. That's like trying to eat soup with a fork. You need to test the cycles for profitability. You need a plain, ordinary, capitalist, greedy buy and sell signal which shows you how much money you make or lose.
Yeah. Let's take a little break, and we'll be back with Bill Meridian and Cycles Research. Thanks, Bill. We'll be right back with you.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we're talking with Bill Meridian of Cycles Research. Bill, do you want to talk a little bit about the signs of the bear?
Yeah, well, next year, I think we're having a difficult year, a bear market. And I've been accumulating these, and the gist is, if there, as my old friend Ian Notley used to say, if there is too much money made available, then any Tom, Dick, and Harry can buy anything. And all asset classes rise together. And if they all rise together, they all fall together, which means you cannot diversify by jumping into something else unless you go to cash. So what's one of the signs? You follow the smart money. I remember when I left New York in 89, 90, the Rockefeller sold Rockefeller Center. That was the top of the real estate market. The bottom was when they bought it back. So what's happening right now? Venture capital and private equity funds have been selling out of the more than $40 billion raised via private offerings that include at least one venture or private equity investor. $29 billion of the 40 was for firms that were unprofitable. That's 69% of the total proceeds. That's the second highest ratio in 25 years. The last one was 86% in the year 2000. So that means they're looking forward. They're anticipating weakness. But why would you want to hold an unprofitable company going into a weak period? They'll sell it to somebody else. Then Banksy, which I think must be an auction house, set an auction record with his painting of chimpanzees, or I guess that's the artist. The Evolved Parliament is the name of the painting, sold for £9.9 million, $12.2 million to an anonymous buyer, shattering the previous auction high and the £2 million pre-sale estimate. Bidding went on for 13 minutes. So there's too much credit enabling anybody to buy anything. And I got a call from my friend the other day. He says, hey, Bill, he says, I got an unusual request. The woman wants me to pick a day for her, astrologically, to sell a guitar. He said, well, how much do you want to sell it for? $3.2 million. He said, well, what kind of a guitar is it? He said, well, it was played at Woodstock. Well, who played it? She said, my husband, Alvin Lee. It's 10 years after. $3.2 million for a guitar. And that's what happens when you get to the peaks, get to the peak. The other thing that tends to happen is, well, gold. I've got a whole list of them. Gold and the dollar are supposed to move inversely, except they're not. And why would that be? Because people want safety. And I lived overseas for 30 years now, and whenever it gets things get dodgy overseas, everyone moves their money to the U.S. So the dollar is strong and gold is strong. And I think that'll continue through the end of the year and probably get even stronger next year. So, oops, I got to clear a call here. So that's another sign, and some professor did a study, and he said when the number of asset classes rallying starts to diverge, like stocks, Larry, in other words, if some asset classes start going sideways to down and other asset classes keep going up, that is a sign of a divergence between the different asset classes and the signs of a top. So this is where we are, too much money for anybody to buy anything.
Okay. You want to move over to the China now and tell us what you're seeing?
It's very easy to, I mentioned the horoscope of China, the 1949, the current regime, which the chart is 1949. That Pluto is hitting the Jupiter in the chart 5 times. It's already hit it twice. The first 2 coincided within days of bad economic news. I lived in New York City when Pluto went over Jupiter in the horoscope of New York City during the Beam administration in the 70s. And that was a fiscal crisis. And the planets are the timing. In other words, the situation is already not sound. It's just when the planets hit, that's when everybody realizes it, and the crisis manifests. So they have 3 more hits of Pluto going over Jupiter. So what has really happened? Now here's where the fundamentals come in. There's a book, Red Flags, Why Xi's China is in Jeopardy. It sets out a well-researched and tightly argued challenge to the notion that China's destiny is world dominance by the simple arithmetic of extrapolation. Now, here's why we need cycles. I went to school, and they teach you it's a lesson in extrapolation. Nobody knows where cycles are going to occur. International credit ratings are downgrading the long-term debt rating of Chinese government debt. Too much debt, and much of it is uncollectible. It's of bad quality. And Chinese banks are suspected of using the same deceptive banking methods. I have a subscriber to my newsletter who has a PhD in international accounting, and she has assured me that all Chinese and Russian financial statements are fake. They're worthless. And so if we go down one more, the Chinese have made this worse by allowing economic data reported to be adjusted. In other words, if local officials aren't meeting quotas or whatever, they can adjust those numbers to make them look better. Debt in China keeps rising from 254% of GDP, nearly 3 times of what it was before 2018, in 2015 to 277 in 2016. GDP growth is slowing, and it's believed that $600 billion of these loans are uncollectible. Now, there is a guy who says that they have billions in undeclared assets somewhere. But if you think of this, let's go down one more and finish this. Okay. China, here's how they've been investing the money. If this was a company, they'd be broke. China built $9 billion of infrastructure in the Congo in return for access to mineral resources in 2008. But Congo could not provide the electricity. They started buying it from Zambia, and then that wound up they had to build their own electricity plant there, which was an unexpected expense. The copper reserves turned out to be a third less than what the Congolese told them it was. Then the price of copper dropped 20% since 2008, and the corrupt politicians who helped China get into power are now out of power. So this is an example. There's numerous examples around the world of very bad investments. And so the key is Donald Trump is essentially putting the screws on them at a time when financially they're very weak. This is why they're squawking so much. And if this were a company and revenue started to go down, what would happen? So Trump has really got them in a very difficult position because the structure, nobody really knows what it is, but it's got to be very weak. And so if we go down just one more, this is the timetable. This is Pluto hitting the Jupiter in the Chinese horoscope. The next one is January 6, 2020. But notice September and October of 2020. Well, September and October are the 2 months in which we've had the most crises. They're known as bearish months, and this is when these hits occur. And as Charles Jane used to teach, the most telling blow was struck by the last transit, which is in October or September, which, again, are 2 of the most bearish months. And, of course, when all the news is out is when the market is usually at a low. And we've had more lows in the month of October than any other month. So this is only one of the of the fundamentals that will be cited next year. I'm not saying they're causing the downturn, but the media has to latch on to something bearish when the market goes down and something bullish when the market goes up. So that you think you need their news and therefore you tune into them every day, even though you really don't need it. So that's how the news on Wall Street works.
Well, listen, we've got to take a break here.
Sure, take a break.
Bills. Could you stay with us and tell us about your YouTube channels? And we'll be right back. And also your new book. That would be great.
Yeah.
We got a second here, Bill. How are the folks, if they want to? Oh, here it comes. We'll be back with you in 2 minutes. Stay with us, please.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, the opening call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back with Bill Meridian, Cycles Research. Bill, you want to tell the folks about your YouTube channel and your book and how they can reach you? I've posted the details, but give them a little heads up.
Email is at bill@cyclesresearch.com. I have a monthly newsletter and a weekly institutional service. And a number of books, which you can see at billmeridian.com, of which the most recent one is Mastering Geopolitical Prediction, which is about political astrology, which is called mundane astrology.
Wow. Is this pretty much fitting on with all the stuff that's going on with the impeachment? Is he going to be impeached or not, Bill?
Well, I've said all along no, because I compared the horoscopes of the 3 prior presidents who have been impeached, which are Johnson, Nixon, and Clinton, and in no way does his chart look as bad as theirs did. And this process they're going through right now is phony anyway. So.
All right, that's good enough. That's we'll have to wait and see. Bill, we have a question on the downside. Do you have a downside projection for October where we might reach here in the Dow Jones in the next week or two?
No, I don't really. I just don't have the charts in front of me.
Okay, that's fair enough. Listen, I want to thank you for joining us because you're always entertaining, have some great information, and your success is unchallenged. So God bless you, my friend. You've done a fabulous job. Bill, how old are you? 70 yet?
I am 70. I was 70 in April.
Yeah, that's what I figured you were close to that.
Everyone thinks I'm 50 because I took very good care of myself during my life. And I have to squeeze in one thing here. I went to a number of these quant groups. I belong to these. I go and I mostly listen, but I went to a one-day conference. You go there and they show you all this fancy stuff on the screen. I said, what's the predictive value? What do you do with this? I can tell you in the next call, but none. And have you ever heard of Art Merrill? No. Joe Granville? No. Frankie Joe? No. They haven't heard of any of the great traders, any of the great market names from the past. They're brilliant with technology. The way they present stuff is beautiful. And the largest hedge fund in the world, somebody I know on the inside tells me they spent millions. They brought in all these quants. They didn't come up with anything. And if you talk to them, you have to have a basic principle. They don't have that, which we have.
Wow. Hey, Bill, thank you very much, my friend. Bill Meridian, Cycles Research, Vienna Roster. See you on the flip side tomorrow, folks. May God bless.